Already 8 people on board. Welcome, everyone. Thanks for coming. Perhaps I will give a couple minutes to introduce the webinar and see if okay, thanks. So you should be seeing now the Forex brokers comparative table, which is immediately seen when you click on the brokers section on the menu. Then you will be brought to the comparative table, and we will center our attention during this webinar and the information that we can gather from this page. Okay, so without any delay, let's start the webinar. First, thanks for coming. Good day, everyone. And let me start the webinar asking a very simple question, and that is, are you ready? Are you ready to trade the Forex? I ask this because the considerations we are going to devote some minutes during this webinar are about the choice of the right broker. But obviously, as a trader, as someone who dedicates some time and effort to educate other traders, I must also ask some preliminary or basic questions. If, for instance, you do consider yourself qualified to trade Forex on a preliminary basis, do you possess the determination necessary to recognize and overcome emotional problems inherent in Forex trading? Or if you think you possess the drive and the mental focus necessary to embark on a long journey of study and experimentation? Most of us don't have the answers to these questions beforehand, especially when we start out. But nevertheless, consider that the choice of a broker is a rather simple task compared to answer these questions, compared to become a proficient trader. Okay, so it has some complexities, as we will see. There are many aspects to consider, but all in all, nothing compared to becoming a trader, to mastering the market. So that's the good news and the bad news for on the other hand. So what we have here is what we call the brokers table, or the comparative table. There are a large number of Forex brokers in the retail Forex market these days, each one treating its services as the best in the entire market, with foreign exchange brokers located all around the globe, especially concentrated in Europe, Asia, America. The complexity of choosing the right broker for your personal circumstances may not be giving adequate thought, or may feel daunting. And the complexities, or the complexity relies on the number of aspects to consider, and the fact that it requires a certain amount of awareness to choose the adequate company to trade with. As you can see on this first page, there is a vast diversity of options to choose from, and due to this vast diversity of options, it's not possible to speak of a broker who is the perfect for all kinds of traders. Instead, you should carefully consider your own expectations from trading and compare that with what is offered by the broker, and choose the one that is best suited to your needs. Okay, and this is the focus that we will try to bring into this session. It can be a daunting task to sort out between all the available brokers, seeking those that are best suited to your needs. However, at FXStreet, we have worked to simplify this task by displaying what we consider the most reliable brokers in the market. Okay, so in this webinar, we would like to explain importance of the various criteria according to which you can screen the brokers we have listed and make your choice. The table you are seeing here, if I provide you with a link to the table, you will see that by each time you enter that page, the order the brokers appear on the list is aleatory, so not to favor anyone on the list. So if you are seeing here a specific order, it's absolutely aleatory, and I will try to switch or to scroll the page not to favor anyone in terms of exposure. Okay. Another aspect important to mention here is the fact that um, we we work to simplify the task by displaying what we consider most reliable brokers in the market, but the brokers that who are listed here respond also to a contractual agreement between the company, the broker company, and an FX3. So to be on this page, brokers agreed to pay a fee, and therefore there may be other brokers which we would be considering as reliable, but which are not appearing on our side because there is no contractual agreement between the company. Okay, but nevertheless the choice is big, as you can see here from the page. Okay. It's also worth mentioning that by uh, switching to another language, so to say, another zone, you will be seeing also different composition of this table. Also, depending where you access this page from, some of you might have clicked on the link. Perhaps you see a different selection of brokers accordingly to the identification of your IP and the country you are in. Because certain brokers um, uh, do not allow for um, clients from a certain jurisdiction, so this is filtered out through your IP address. So no matter what broker you are evaluating, this is the idea we want to stress during this webinar. There are basic factors to consider. One is to identify your Forex trading priorities. This is perhaps the key point where we will make more insistence in this webinar. And then you conduct a thorough research of brokers. This is perhaps the most tedious part where we aim to facilitate things through the filtering, the screening of this brokers list. But nevertheless, it's the tedious part for the investor, for the trader. And then finally, you select the broker that is strong in the areas that appeal the most to you in the first in the first screen, in the identification of your trading priority. Okay. There are before we move on, and what we'll do is basically going through all these columns you see here and explain a little bit what information you can find in each one. But before we move on, let me just mention a very common mistake during this process, and this is the procrastinating the decision or selecting a broker too quickly. We typically feel so attracted by the potential return some people have made trading currencies that we easily skip the broker selection stage to get on with real trading. And without knowing anything about your trading skills, I can almost guarantee that your initial deposit, whether it is $50 or 50 grand, it will be lost in the near future. And that's not because you skip the broker selection process itself, but because the selection process requires you to define your trading style and its specific requirements. Okay, um, so that is a good part of the selection process. Which is a tedious task, but it has this good aspect into it. Is because it makes you more awareness to what you need. It will be the same as if you would buy a new car or a new wash machine or whatever. There are different types of products, each designed and constructed for a specific environment. And the same is with the broker's choice. There are a few elements that probably remain important uh, independently of your trading requirements, such as regulation and security of funds and so on. But there are many more which are really responding to specific requirements. Okay, because after all, or in the end, uh, offering uh, offering or creating market in the currency world, it's something very standardized. I mean, euro dollar is euro dollar everywhere. So you have to differentiate yourself through the costs and um, more uh, more specific things like functionalities of the trading platform or added services and so on. And this is where we as traders have to look for the differences between the different brokers. Okay. Obviously, needless to say that any broker that is appearing on this page that has agreed, come into agreement with FXStreet has passed our own criteria, and obviously regulation is part of this criteria. So there are some common aspects that we already try to solve or to filter, and so you may go into more specific detail if you start your screening process, your selection process through a table like ours. So we do not list everyone, but we do make a first filtering according to our criteria. Okay, so do yourself a favor, take it easy, and be methodical to do things correctly. The Forex market is not going away tomorrow, so you have time to do this, to go through this process. Okay. So a new trader, put in different words, a new trader would not be ready for trading if he doesn't know, for instance, how many pairs he will trade, or if his position management technique may be affected or not by first in, first out rules, or if because of his trade frequency and style, his results are sensitive to spreads or not, etc., etc. So the selection process will make you aware of all these requirements. Okay. Fine. There's a first question from Sandy. If I'm in Canada, so how do I filter out which brokers do not service my jurisdiction? This is done automatically. So if you are accessing this brokers table from Canada, the brokers you see should be operative in Canada in accepting clients from Canada. Okay, so it's technically we're doing this geo filtering. So moving to the first page, the page is organized in a comparative table where we can access data, company data, trading details, the specifics on demo account, specifics on the platforms, and also the live spreads. The spreads currently being gathered from live trading. Okay, and then we have on each broker there is a specific profile page where you can see the same information as in the comparative table, but with a more depth into some of the information, like the platform, the descriptions, go into more detail, and also the services are explained in more detail. Okay. Um, let us perhaps go. Obviously, you have an advanced search where you can filter uh, by regulatory bodies, by instruments, for instance, the minimum deposit, the type of platform. So we offer a few filters if you have a clear idea what you need, and uh, the aspect is one of the filters. So this is you can start your search with an advanced filter. Otherwise, you can first do a visual screen and go um, and see what traders offer, what you are looking at. Okay, so we have here on the left, starting with the broker's name, the headquarters, where they are located, the languages, many times important for the trader to be to access the support team in their mother tongue. So you can check if your language is being offered by the broker, and then regulation. Um, you have here which regulatory bodies are supervising the broker. We'll go into more detail into that. Okay, the business nature. Here we consider. Um, um, Let me just mention that I've been using the word broker, and in fact, technically, we would have to differentiate between broker and dealer, being one a market maker and the other uh, uh, an intermediary, so to say, and uh, between the liquidity provider and the trader. And but throughout the webinar, I'll be probably using more the word broker than the dealer, but I'll try to switch from broker, dealer, and dealer, so not to um, be technically more correct. But here in the business nature column, so we differentiate um, if the broker is a market maker, or if the company is a market maker, or the business model, or ECN type, or if in some cases you will see that there are hybrid type of brokerages. Yeah, this may depend on the platform. Some brokers offering different platforms. For one platform, they may act as a market maker. On the other, they may act as STP broker. So you may have different models offered by the same broker. Okay, the year the company was founded. Then you have brokers news. I think it's interesting to follow the press releases of brokers to see their novelties and facts, data according to their press releases is something which might be interesting in terms, especially in terms of technology. There is a lot of novelties coming to the scene. So it's something that you might be uh, willing to follow in order not only on your broker or interested broker, but also other brokers what they are bringing into the market in terms of offerings and so on, regulations and so on and so on. Okay, the type of uh, wire to fund your account. So this is something that when if you have a PayPal account and you have some funds there and you want just to trade with those funds, and you might choose this might be one criteria for you to uh, to put a plus in your balance of decision between one broker or the other. Okay. The client support. Okay. Client support. So most brokers these days offer live chat support. You may give importance to this. I would also encourage you to test the live support, how fast they are, how knowledgeable they are. This is something quite important. Okay, and then if we move here to the specific profile page, okay, this is where you would see the information that you probably be giving more attention to. Okay, and this we would start by the regulatory bodies. Okay, there is a list of regulatory bodies on the page. If you click on it, let me see, let me check. It's regulatory organization. So you can see the different regulatory organizations for different jurisdictions. Okay, so important here is that apart from the regulator itself, you want to consider in which country the broker is regulated. Not all countries have the same stability in terms of economic and financial situation. And your task as a money manager is to limit any foreseeable risk factor and limit the probability that one day you will wake up and read the news and see that the government has interfered and taken control of your fund there where you have the your broker account. So this is a situation that you want to avoid. So obviously it's important to see the credibility of the regulatory body, but also consider a major picture of economic and financial conditions of the country itself. Okay, some brokers, some broker dealers are even regulated in several jurisdictions at the same time. This is not uncommon. Many brokers will show you that. So this is also something that you might consider. If a broker mistreats you as a client for any reason, your major remedy is to apply your rights under the regulation and law guiding the jurisdiction of your FX broker. Okay? So if the jurisdiction is strict enough and the regulatory resources are available, it's much more likely that the financial regulator will look into your complaint, will investigate the broker's practice, and promote a remedy if the client has been treated in an unfair way. Okay, so here you can investigate yourself, not only, or should investigate, not only about the regulatory body, but also how the regulatory body responds in accordingly to the broader regulation and laws of that particular country. I mean, there are some more questions. I mean, I'm from India with a broker located in Cyprus and regulated by CISEC and FCA UK. Are we eligible for the compensation if everything goes wrong with the broker? I think, as far as I know, under the CISEC there is no compensation fund, but I may be wrong here. The thing is, the CISEC regulation, a broker may be regulated in Cyprus and automatically through the EU passport be also regulated in Europe, but that is not the case, or there is a difference if you open the account under the um, the broker in the UK or in Cyprus. Okay? Because if you have any complaint, in that case, you would have to apply to the regulator where you open the account. Okay? So you should investigate in each case how the regulator responds to the case. The regulator governing that jurisdiction where you have your funds in that particular country. Okay. In case of EU passport, I would try to be a little bit more cautious. Okay? Even if the SciSec is doing a good job in complying to all the European guidelines, I would search for differences, especially in what segregation of funds and compensation is about. Manoj asks, could you explain what the advantage is with a very low spread brokers? If all else was equal, then surely all traders would only go with them. Sure. I mean, the spread is an explicit cost of trading. It's the cost that you incur by opening a transaction. And but you have also to consider there are implicit costs, not only explicit, implicit costs that may affect your trading as well. And these may be slippages, for example, or the platform frozen in a delicate moment, especially during news releases or high volatile moments. There may be also other explicit costs like commissions, for instance. Okay, so you want to take that into account. Okay, some brokers prefer to enact a spread plus commission model in which their fee structure shows a very low spread plus a certain commission per lot or per million traded, while other brokers prefer to include a commission within their spread. Okay, this will show a higher spread, obviously. Okay, some brokers effort to demonstrate flexibility and variety for their clients offer different account types, spanning both type of fee structures. One account with a spread only, and another account with spread plus commission. This is also something cultural here, because some cultures, the word commission is somehow seen negative, while in other cultures not. So that is why brokers have probably adapted to this cultural trends and omitted many times commission in order to conquer that specific client. But be aware that this cost has to be put somewhere else. Okay, may it be in speed or requoting or slippage. Okay, this is something that you want to be aware of. If we go back here into the table, you have the live spread table here, and this is our live spreads that are gathered in real time. So you will see them changing in real time. By the way, the same spreads appear also on the profile page of the broker. The spreads you see here, they also change in real time. Okay, here, the way we have this information displayed is that we do not put together spreads and commission. So in the case a broker has a commission, it will say here, it will indicate yes, it has a commission, and it will explain if that commission applies to one type of contract or some specification, or the cost of the commission, for instance. We have here another broker, okay, where the commission amount is specified. Okay? In this case, $2.50 per one lot trader. One lot means 100,000 in this case. Okay, so obviously these spreads are very low compared to other brokers, but you have to do the math and calculate that to sum that commission to the spread. Okay. There are several brokers comparison sites out there, says Manoj. Are they credible in your opinion? Well, the thing you want to find out is if the comparison of the broker or the brokers listed, if there is any criteria to list them there, if the company goes through any criteria. Okay, we do that by regulation. So we do not accept brokers who would not be regulated. Okay, so this is the first thing you want to know. But then the comparison is much of a task of the investor or trader, because if all the information is shown, then it should be clear to you after a brief study what broker dealers are more appropriate to you. And obviously, before opening and funding an account, I personally would first of all open a demo account, in order to verify some of the finer things, like we will talk about, like rollovers and stuff like that. Also type of orders and the offering, the markets offered, and so on. But I would also contact the broker and contrast that information, or let the broker send you a contract where everything is specified in written format, so you can, or you would also check the regulatory body is really overseeing that broker. So normally regulatory bodies have a database where you can check if the broker is under that regulatory body or not. We do that. First filtering. We check if the broker is regulated. We ask for the proper documentation. We verify. We check the databases of the regulatory bodies to see if the broker is indeed under their control. So we do that part of the process. But if you do not trust the listing, but you are interested in listing because it's very it's huge in terms of information provided, then you should verify these things for yourself. Manoj also asks, in your opinion, is the experience on demo account with a broker regarding execution, etc., replicated when a client goes live? Not at all. I mean, it's a different condition when volume is a factor in terms of speed and everything. So it will depend also on your type of trading. I mean, if your type of trading is very sensible to speed, then obviously you have to test your trading strategy or system under the conditions offered by that broker live. Okay, because the, the 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 pricing may be a little bit different, and the execution as well. I mean, we are talking about liquidity being distributed, and a market, in any market, liquidity is not distributed equally along all prices. So there are certain prices where the liquidity is less, certain prices where liquidity is more abundant. And obviously, you will notice that in when trading live. Okay, but this would be true for any market, any instrument. Liquidity is never the same. So, but if you're trading, it's more of a long term or less frequent, you are probably less sensible to a small slippage or a small requoting. Okay, since many or most traders are very short term, so they would probably have to check this, because if you are very short term, then you would have to check these aspects with the real money. Okay, the conditions may also be different between different types of accounts with one same broker. Okay, the broker may offer different account types with different minimum deposit amount and different conditions, different spreads, commissions, and so on. So this is something that you want to find out. Okay, the account types are, let me check. The account types are probably under the broker profile. Okay, you have on the first line you have account types. Here you can see if they offer different accounts, how the accounts are labeled, because not all, there is no standard name for the account. Okay, obviously many brokers will specify the account as with a mini or micro, mini, and standard account, referring to the lot size. Okay, but other brokers will name their accounts differently, pro account or whatever. You know, so there is no standardized labeling of accounts. Okay, the interesting point here is that you check if the broker offers different accounts or not, because other brokers do not make a distinction between accounts at all. It's all the same conditions for everyone, while other brokers, or perhaps most brokers, do differentiate. So you want to check. You want to check this. You want also to check the lot sizes. I'm going out now away a little bit from the Manoj question, going properly into the other aspects here, list or mention it in this page. So the lot sizes is something that is very tied to the type of account, okay, as well as the minimum deposit, okay. Broker dealers usually, as I said, offer different types of accounts. They sometimes they differentiate between a mini account, standard account, and the mini account would require a lower starting capital, but sometimes it comes with a limited trading platform or worse costs, worse spreads, or whatever. And a standard fully functional accounts sometimes require higher deposit. So you want to check this as well. So before you commit to a broker, always read the trading conditions related to the account you are opening, to that specific account. And this information is rather difficult to bring on a comparison table. It is these are the limits of the comparison table. The comparison table enables you to do a first screening, but then there is a big process to go through, and specifically the more requirement you have, the the more daunting the tasks become. Okay. In the terms of lot sizes, here we can talk of a more standardized labeling. You have the standard account, which is the 100,000 units. Then you have the mini account, which is 10,000. Then you have the micro account, which is 1,000 units. And some broker dealers offer you the possibility to trade in units. I mean, you can buy or sell as small as €1 or $1. Okay, and this is interesting depending on your positioning position size calculation. The way you calculate your position size will give you a hint what kind of trade lots you need. Most of us retail traders will probably be better off using a broker offering micro accounts or even units. Okay, because even with mini accounts, it's easily that if you have an account, let's say with 3K, 6K, it's very easily to become over leveraged if the minimum size is 10K. Okay, so this is just a personal choice, but depending on your start balance, you may consider to trade using units or micro lots. Okay. Then obviously the commissions, we have talked about it. When doing the calculation, the commission calculation, don't forget that commissions are oftentimes you have to account for the round trip. Let's say you have to calculate the commission when you enter and when you exit, and add that cost to the spread so that you have a more complete picture of what the explicit cost of trading is, and then you multiply that cost by the number of trades you're having per day, per week, per month, and per year, and so you have an amount figure as to how much money you have to make to be just break even. Okay, and I can tell you, the higher your frequency is, the more sensible you will be to spreads and commissions, obviously. Okay, but spreads and commissions or explicit costs are not the only factor. You want also to check, perhaps with other fellow traders in forums and so on. You want to check if trading with a specific broker dealer, if it involves any type of implicit costs, such as slippage, requoting, and so on, because this can also be considerable. Okay. In types of instruments, many broker dealers are diversifying away from only spot forex. So you have sometimes you have stocks, commodities, futures. I guess let me check here. Perhaps another page. Okay. Here we don't have. Okay. You may check. You may check if the broker is offering other types of instruments. Okay. These again will depend on your special requirements. Because there is not a better broker or worse because it's offering less markets. By no means the same as the pairs offered. So there are brokers offering a huge variety of crosses, while others are more limited. But again, this is something that you should find out as per your need. If I personally like to trade a lot of crosses, But if you trade only a few majors, then this will be no point for you. Okay, the amount of pairs offered. Okay, if you trade exotics, uh, perhaps here the explicit cost becomes something more interesting because these pairs, exotic pairs, are more expensive. Pardon, more expensive to trade. So you may check the spreads for that particular market in order to make a comparison. Okay. Um, Fractional PIP pricing. By this we mean uh, in most pairs the PIP is the fourth in most pairs, not EM pairs, but for all other pairs, most the PIP is the fourth decimal place after the comma, and some brokers offer a fifth digit in the pricing, sometimes called the pipette, or fractional PIP pricing. And again, depending on your trading style, you may be sensitive to this PIP pricing. Okay. Most brokers are now offering fractional PIP pricing because this allows them to go into small spreads where you see 1.8, 1.7, with very little differences. This is only possible if you offer fractional PIP pricing. Okay, again, especially for scalpers, very short-term traders, would this be an issue? Okay, so let's move on to segregated accounts. This could be considered a topic by itself, where we could dedicate an entire webinar to. Segregation applied to the securities industry um, requires that customer assets being held by a broker dealer be kept separate and segregated from the company's assets. This is referred to as security segregation. Um, Security segregation is considered a protective measure to keep the client funds safe and separated from the broker's own capital. Okay. If you ask me, does this guarantee full protection? The answer I can give you, it depends on the country's laws and regulations. Again, we have to check for the laws and regulations of that specific country. Traders have the right to receive compensation in case of company liquidation and bankruptcy, but the amount of compensation will depend on the financial rules and regulations specific for each country, similar to with bank deposits and bank failure. Okay, very similar, because there would be probably under very similar rules and laws. Okay, therefore it's not enough to say that a broker offers segregated accounts, because what matters in the end is how much you'll be able to recover should things go wrong. Okay, for instance, all FCA UK regulated brokers are obliged to offer segregated accounts according to FCA requirements. Okay? I can give you here, if you file from the regulator, where you can see the conditions imposed to brokers registered under their umbrella. In case of Swiss brokers, for instance, funds may be not segregated, but the client's accounts under the broker are considered bank accounts, because they have to apply for a banking license to offer spot forex in Switzerland. So and there is a deposit security up to 100,000 Swiss francs. Okay. In the U.S., according to the Commission Exchange Act and the Commodity Futures Trading Commission, the FTC regulations, any FCM, any futures commission merchant, is required to treat all customers' money as customer property. And what this means is that customer segregated assets cannot be used to margin any other client's trades. Okay, um, um, but these funds, in turn, can be invested in assets which the broker determines that are highly liquid. The broker may invest these funds in, well, you can have it in cash at banks, at other depository banks. It may have it in cash at clearing houses, but all, the broker may also use these funds to buy U.S. treasuries or to invest it in high quality liquid money market funds. Okay, so but this applies specifically in the U.S. to futures accounts, and there is still a lack of segregated accounts available in the U.S. to spot traders. Okay, you have some information as well from the CFTC for if you want to study a little bit on that matter. Okay, so segregated accounts, they can either be opened in the name of the individual client, or they can be joined for all clients. Usually in the retail forex industry, it's going to be the second case. One bank account for all clients, opened in the company name. It's segregated, but it's a joint account, so to say. But there is also an emerging solution called a custodian account, which means that a client opens a private bank account under his name, obviously with a bank the broker uses, and then he opens a trading account with the broker. This account is funded. It's funded. I mean, if the private account is funded at the client's name with the initial amount of funds you wishes to trade, and then each day there is a so-called reconciliation of its profit and loss from the trade. Okay, but this solution called a custodian account is something that is emerging, at least for higher starting capital. Okay, they mean that some brokers require a certain minimum amount in order to offer this kind of any segregated account. Okay. It's also worth mentioning that other brokers, especially those who have a global presence, offer segregated accounts only in certain countries. So you want to check also if a broker says, okay, yeah, offer segregated accounts, you want to check in which countries. Okay, these are the fine nuances that obviously we try to make them visible in our listing, but you want also to check, especially if you consider other comparison tables where this information might not be as clear. Okay, so let's for instance, if you check a broker, you may see here under the disclosure of a certain broker, you may see segregated accounts offered only in UK, Japan, and Australia. Okay, things like that. So it's not that broker offers segregated accounts for every client or for all accounts, but you have to check this small print as well. Okay, fine. We are coming more or less to the end of the session. I know there are other aspects to be considered. There is the platform issue. I mean, there are tons of dozens of platforms in the market right now, each one with a specific functionalities. This is something that requires a lot of study in order to compare and to be updated with all this information. Press releases are a great source for to cope with all these novelties and changes. Um, Many brokers offer video tours. We in those cases we have these video tours available on the on this tab here on the platforms, so you can check the specifics of that platform. Okay. There is also the services um, being offered. This is something um, that you may consider. Does a broker offer premium services such as news feeds, market commentary, trading signal? So you should consider how important are these premium services to your trading. Okay, um, special indicators such as volume or distribution of liquidity, or there are brokers offering specific uh, uh, software um, to to analyze the market, to identify patterns or whatever. So if this is something of your interest, then obviously it will have a big weight in your decision. Because this is where brokers really try hard to differentiate, is in the premium services, and this is for sure something you want to check. Okay. Okay. And in the social media, you want to check what is the reputation of that broker. Okay. Um, so you want to read the testimonials that you find online. Okay. About that trading, about that broker. Okay. And so on. I don't know if there are more questions. We have still 2 minutes to finish the session. Seems like not. There may be other things that you may take note of, like withdrawal fees. Do a comparison of the withdrawal or wiring fees of the brokers of your choice. Okay, over the long term, you'll be wiring back a portion of your profits on a consistent basis if you withdraw regularly from your accounts. And for some traders, it could mean once every several months. Other traders less than that. So do your homework so that the fees incurred here do not cause too much of a dent in your trading profits. Okay. Okay, so we have to wrap up here. Thanks for your attention. Thanks for being here, and hope to see you in a future webinar. If when any questions, I provide you here my email, and you can contact me anytime. Gonçalo at FXStreet.com. Have a great week. Have a great day, and talk to you soon. Bye bye.